Welcome out to another Trading Justice podcast. This is Mark Justice, joined with my brother Matt. We got a lot to break down. We're going to have a fantastic lesson on volatility pockets. You will never look at volatility the same from a technical point of view after Matt walks you through it. It's just absolutely fantastic. I'm really excited for that. We're going to break down the week that was. That's going to take about 45 seconds to say tariffs on, tariffs off. And then we're going to talk about the massive week ahead. I got a fun game to see how good Matt is to celebrate the Seattle New England Super Bowl. Some trivia facts. We'll see how close he can get on that.
Something tells me I'm not going to be close, but
I'm a liberal judge. I'm a liberal judge.
All right. I won't be too nervous.
And then, of course, we'll talk about Gold and Silver's historic run. So we're going to break it all down. But how are you doing today, brother?
Doing great. Excited to be here with the crew here to do another edition of the Trading Justice podcast. And volatility pockets, kind of all the rave these days. We've had 4 of them in the last 4 months, and we've had a very similar response out of all 4. And so it's a very interesting conversation. I think it's important to understand the technical events because for others out there, you might just call that the Trump taco trade. We call it a volatility pocket, and there's a timing and a price element to that. And so I think it's very important to have an understanding of how to navigate those uncertain volatility events that are akin to a miniature black swan event to a certain extent.
Yeah, no, and navigating volatility, right? I mean, becoming a successful trader, you have to be good in a lot of variety of situations. And this lesson that you have coming up, very beneficial even for the most advanced trader in what you have prepared. So I think traders should look forward to that here in a couple of minutes. But man, that volatility pocket came and went last week. Trump he didn't walk back, but in his speech in Davos after causing all the volatility last Tuesday, well, he started walking it back, saying military force was off the table, and then the tariffs were off the table, and then he was going to put tariffs on Canada. But Carney in Canada is already saying that he's not going to.
Oh, you're mixing and matching all these different conversations. Yeah. Let's get dialed in here. First and foremost, let's just laser focus on that one gap due to the uncertainty of the tariff conversation. That was when last week we were talking and the market was gapping down and we were expecting that market to gap down. We did see that gap down. What was the news? The news was based on the combination of the hypothetical invasion into Greenland and then secondarily the ultimate question of 10 to 25% tariffs being put on 8 European countries as well. Obviously, the market's not going to price pretty good when it comes to that type of uncertainty. Market gaps down, sells down. 24 hours later, the president walks that back. You can call it whatever you want. The president walked that back. And it walked that back because we don't have a deal on Greenland. We have a deal on military expansion in Greenland. We already had that, mind you. And we also walked back the tariff threat of the 10 to 25% tariffs. That conversation was done in the market 3 days ago. The one you're kind of bringing to the table over the weekend was the one on Canada, but they were 2 completely different events that I don't think we should mix them together because one did not have anything to do with the other one.
Well, they're in Trump's head. That's the problem.
Well, yeah, I know. I'm just saying, the Canadian one didn't really have an impact on anything.
No, it did not. But here we are. We're going to talk about how technically it responded in a second.
Mm-hmm.
But Matt, is it fair to say that for the time being, tariffs are now on the back burner again?
No. There's 4 volatility events in the last 4 months. If you're ready to say Trump's going to not use tariffs as the ultimate threat to get his way economically with other nations, I think the only way to say that's off the table is when the Supreme Court rules on the tariff case,
which they refused to do this last week.
They've had 2 opportunities to release it. The ruling's already done. The writings are already done. They're just not releasing it. So. No, even after the volatility event from last week, they got clarified and repriced pretty quickly. 2 days later, he put that same threat on Canada for a misunderstanding of the Canadian-Chinese trade deal that they were thinking about making.
Oh,
And
let's
so,
call it what it is. He didn't
no, like
misunderstand. He didn't like what Carney said at
he
Davos.
didn't like what Carney said in Davos, and it had absolutely nothing to do with the Chinese trade deal. I agree with that 100%. But at the end of the day, no, I don't think you can remove the uncertainty of the tariff threat from the environment. We've had four of those situations in the last 4 months. It took 2 days after the volatility event for those threats to get brought to the forefront again. It didn't have a lasting impact because everybody in the market is like, whoa, this one doesn't make a lot of sense. And Trump obviously walked away from that one pretty quickly. But no, I don't think you can. I don't think you can say that the tariffs are not a part of the conversation moving into the future, because the president is it uses tariffs as a way to get what he wants from a geopolitical perspective, from a foreign policy perspective. And so that's number one. Number two, again, it took 48 hours for him to use tariff threats after the latest volatility event. So, no, I absolutely not. I think it's going to be used as a threat multiple times. I think the market sees it as a little bit of the boy who cried wolf at this point, specifically with those Canadian tariff threats. But he walked back the European tariff threats within 24 hours. And so it's always there, but does it have a lasting impact on price? Obviously, the market moved past the Canadian threat very quickly, but ultimately, no, I don't think the tariff headline risk is removed from the market until the Supreme Court rules.
Yeah, and which could be as late as June at the latest. I
At
mean, it
this
could be,
point, I kind of feel like they're going to push it as far as they can because they know what it's going to be.
and so, yeah, I mean, so we might be waiting for a minute on that. Obviously, that will have market ramifications, but when something's, as far out as June, it's hard to for the market or even you to take it in your day-to-day considerations. So it's just one of those things in the back burner, right?
We've been dealing with some degree of tariff induced volatility for the better part of a year now. So like the market's accustomed to it. The market gets cleaned up pretty quickly, especially on alleviation events, but it's always in the back of your head, a Trump tweet. Like
Yeah.
it's always there.
And perhaps the market price action was very, very interesting. You'll break that down, but gold and silver's price action was probably even more interesting. Like when you got that typical geopolitical surge on last Tuesday, right? And then you get the alleviation event, and gold and silver like, we're actually going up for different reasons.
Yeah, I was gonna say whatever you're saying has nothing to do with how I see gold.
Yeah,
Like
the timing of it though, right? The timing of it was, you had the breakout on gold, last Tuesday, and then as soon as you had the alleviation, I think you sold off for about 14 minutes, and then it was back to the momentum. But man, this has been a historic run, like one literally for the ages, one that they'll write about in the precious metals history books. Little overextended in the short term, but that's quibbling. Uh, it's just been a beauty, hasn't it?
yeah, it has been a beauty, but I do have this as overextended. I think secondary pattern development is going to be important and key here, whether or not we see a high base between 5 and 5,100, or whether or not we see a little bit of a pullback to reset against that 9 EMA. You're 5 bars into the move after the breakout, and you're about 3 weeks into the move after the pivot. You're deeply overextended here, in my estimation, going into a major catalyst. So to me, you're thinking if you're thinking on the directional side of the equation, you're trying to ask for a blow off top above 5K, kind of showing a little bit of weakness on that momentum here today. Seeing a little bit of a gravestone doji here, a little bit of an evening star starting to show a little bit of slowing momentum as we kickstart this week. So I kind of feel like secondary development is a little bit warranted here on GC and gold relatable instruments. We could go through the litany of reasons why gold is amazing and why there's a pump and all of that jazz. But at the end of the day, our community understands that logic very well. To me, this is going to be a technical conversation on the secondary development here. What type of pullback, what type of consolidation base do we get? And so I do have this as generally overextended, getting into pattern number two and expecting some degree of secondary, whether that's through consolidation and the 90 EMA catches up, or whether that's through a pullback analysis. Either one trader's gonna like. So I just think it's a matter of being patient and letting that cook this week.
Yeah, and patience is something Bitcoin and crypto individuals know very well
Well,
right
before
now.
we get into crypto, let's stay on the commodity side of the equation here. Silver has had a massive pump. You're just running through the 5K at gold and 100 at silver. Like these are historical moments, and you're acting like they're nothing. like they're historical moments. And so silver got to 100. Now we're starting to see quite a bit of volatility above 100. I mean, you tested all the way to 117 just today, came all the way back down to 103. Like there's a lot of sensitivity to volatility right now in silver and in gold, and both of them have very specific pattern developments. So something to keep an eye on. But as of right now, just obviously congratulations to the silver holders for holding this trend. This has been a trend that we've navigated at tackle trading for a long time. It's been absolutely gorgeous. I do start to see a little shift in that volatility at the top end. I'm starting to see a little bit of wickety wick action. We haven't seen that recently. In every single degree of candlestick analysis, 9 out of the last 11 pump candles on silver finished towards the top end of the candle, except this one, and there was one right over here that did not finish at the top end of the candle. That stands out to me a little bit. So what do you make of the kickstart to this week in silver and gold? Both of them big time wicks on the top side, both of them overextended. How would you approach? Because I get it. You want to talk about Bitcoin and Ethereum, but both of us are going to say they're a nothing burger right now until further development. 80% of our community is in silver. 90% of our community is in gold. How would you approach this volatility we're seeing here to start the week? And how would you approach for an ad or a trade? What do you need to see?
I think whether it's silver or gold or random stock, whenever you get extended from home, and home for us in momentum is the 9 EMA, right? And this is just one of these trading rules, trading guidelines to live by. Whenever you get extended from the 9 EMA, well, you've gotten away from your support base. That doesn't mean price can't is going to crash tomorrow, but you look at the last couple times
There's
that
only two
gold.
times you extended from the 9 EMA and both smacked back
I was just
really
going to
aggressively.
point that out, right? This is what can happen and oftentimes does happen, even in the strongest of uptrends.
Look at
Even
this uptrend over here, Chucky, on gold. Like when we start seeing that real pump happen in the late summer last year, early fall. Mark, there was only a couple scenarios where it extended from the 9 EMA, and when it extended aggressively here, you saw that snapback. When you saw it extend aggressively here, you saw that snapback. We're seeing it aggressively here. What's like I'm not
and
saying we're going to get a volatility event on silver and gold, but I
but
would
you can't
suggest a
say you're
pullback
not
is
either, right? And that's one of the things on not only new trades but existing things to consider is that, right, is it's not only about rules in your own trading, right?
yeah.
That in this situation, when I get extended, I start to take some profit, or I start to scale back some. I
Mhm.
start to insist, right? That's just good common sense as a trading rule. But then when you apply that to the same instrument and notice
Mhm.
that its personality has done exactly that, well, that's when you have to say, all right, so not only do I know that when I get extended from the 9, I need to start taking maybe a little bit of profit. Doesn't mean you have to close out your gold positions, but it,
No, that's not what I'm
you
suggesting.
know, but it does.
But I am suggesting that it might not be the greatest time to start either adding to it or starting a position. Like again, how many times when we're this far extended from the 9 on this gold chart do you see the continuation of momentum?
Yeah.
It's rare. It's rare. The
In
gold and silver love the 9 EMA. Love the 9 EMA. Look at it on silver, Mark. One of the greatest pumps we've ever seen on silver, and the low part of the candle never got over 2 points away from the 9 EMA. The low point on the candle hugged it the entire time. The entire time. The low point on the candle, the biggest one was this one right here in late December. You had one right here, 86 to the 9 EMA at 83. That's 3 points. So the most extended would have been for the 9 EMA before some degree of secondary came into play was 2 to 3 points. Mark, you are 7 points above the 9 EMA from the low point of the candle to the 9 EMA right now. Now, obviously, as you go
and we're
higher and
much
higher, you
more
can
higher
extend, but
today. Like you were,
exactly. So I just kind of feel like this is a day trading conversation until secondary development happens here. And I think secondary development should be like keenly on people's radar, whether we're talking flags later on this week or whether we're talking bases. I think there's going to be very, very compelling patterns that come out of this slight extension here.
and it's one of these. And once again, these are the type of rules and framework that we teach in our community constantly, right? If you want to become a great trader, come to Tackle Trading, be part of this community. But I want to emphasize again, right? Develop the rules
Yeah.
in which certain technical situations you manage your thing, and you certainly don't go YOLO calls. When you're that far away from the 90 MA, you wait
No,
for a
it's
better
well, and
spot.
it's one of the reasons why I feel like this is one of only 2 days in the last couple weeks where silver didn't finish towards the top end of the candle, where it actually finished towards the bottom end of the candle. And I think one of those reasons is not because people are fundamentally souring on silver. I don't think that is happening in any capacity. I just think you're too far extended to see the continuation of the pump without some degree of minor reset. That's all. And I would say similar on gold, but gold's actually a little bit more traditional on that technical slide over extension. So I just wanted to get your take on it as well because what I'm seeing is one thing. I like to hear what you're seeing on that side of it. We can talk your crypto now, and this is going to, in my
Yeah,
opinion,
no,
going to be a fairly quick
yeah,
conversation.
this one's going to be quick because for the last 3-4 months, crypto's been one of the worst performing major assets.
Mhm.
Over the last week, it has just had terrible price action. Got me in the newsletter this weekend to write what's wrong with Bitcoin, like, because is something wrong with Bitcoin?
Well, I mean,
Right, like
yeah,
that
you can't hold a bid.
can't
Um,
hold a bid.
So in the newsletter, and if you're not reading the Tackle Train newsletter on a week in, week out basis, you are not doing it right because this newsletter is a juggernaut, but it will absolutely keep you prepared, ready, and ready to rock to the market every single week. What, in your estimation, when you were writing about Bitcoin this previous weekend, what is wrong in the world of with the churchgoers of the crypto space?
I think you have a breakdown of some of the, okay, first of all, some of the reasons people love Bitcoin: a store of a value, anti-fiat play, right? That's what gravitates a lot of individuals,
Mhm.
including myself, to it, right? Is that, oh, fiat currency, I want the modern day gold,
Mhm.
for example. Well, as we've seen silver and gold go on historic runs over the last 2-3 months, what have we seen crypto do? Just the exact opposite. In fact, it's been a win to trade sideways over the last several weeks, right? And then when you have a geopolitical event, right, like the tariffs, what does Bitcoin and Ethereum do? They sell off. Fair enough. Fair enough. But then when you can't recover along with other risk assets, when the alleviation occurs, right? You underperform on the way down, you underperform on the way up, while gold and silver are doing their thing. Some of these like great arguments that crypto individuals have, I think there's some questioning going on about the validity of them. And it makes you question, in a time period where financial conditions are historically loose,
Yeah.
right? Fiat currency is, being questioned. What do
I've
we see
never
with Bitcoin?
seen I've never seen fiat currencies get questioned in my lifetime more than they're getting questioned right
Like
now.
right now. I mean, this should be Bitcoin's moment,
Like
right?
this is what Bitcoin was built for.
I mean, the United States government and the Japanese government are likely doing coordinated efforts to help prop up the yen, right? Which is sending the dollar down, which is, helping fuel a bid for gold. But shouldn't that also help fuel a bid for Bitcoin, right?
Yeah, but we haven't seen that at all
At
in the
all.
last 3 months. Like for a while, Bitcoin, gold, and I loved your chart you have here in the newsletter this week, but for a while, Bitcoin, gold, and the Japanese 10-year was completely correlated. Like one would outperform, underperform, but if one was getting a pump, the other one got a pump. If one got a sell off, the other one stabilized. Mark, there's only really kind of one situation I'm seeing on this chart in the last couple of years where you're seeing a decoupling. And that's right now, where both the 10-year and gold going up, 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 running on the same gasoline. Bitcoin has obviously bucked that trend. And you might argue, well, Matt, back in early 25, gold and Bitcoin decoupled as well. And I'd say you're right. I'm not the one who makes the argument that Bitcoin's gold, right?
Yeah.
They did decouple, but it didn't decouple from the yen chart. Bitcoin tracked the yen. So
No.
what is it that is going on in the last 3 months that we've seen a fundamental decoupling of how Bitcoin is correlated with certain asset classes in the market, i.e., the 10-year note, i.e., gold? Now you're basically rocking with software companies. Like that's kind of what Bitcoin does, is do the same thing as the aggressive, not even semiconductors, but they get the software equipment treatment. What's going on here on the macro level to change such a correlation over the last couple of
Yeah,
years?
and I don't have the answer. I wish I did. I wish I was smart enough and intuitive enough. I just know the price action is telling me something.
Yeah.
And this is where, we like to think, as you and I, we spend a lot of time on technicals. We spend a lot of time theorizing about the macro. And when you don't have an answer to the macro, because the macro case should be sending Bitcoin up, in my opinion,
Yeah.
right? When you have currency problems like you do, when you have problems in the fiat faith, right? Bitcoin, this is what Bitcoin has been argued for years, and you are not seeing that price action, right? Well, you can have all the macro theories that you want. This is why technical analysis plays such a vital role in a successful trader's arsenal, is that all of a sudden instead of up, up, and away, you're now saying, if that support level breaks.
Well, I mean, like, I'm not looking to short Bitcoin. I'm not looking to play it on that side of the ledger. Same thing with Ethereum, but I'll tell you, I did play it to the bull side on that 95K break, and I loved the technicals going into it. I thought it was clean. I thought it developed really, really, really well. And we got a 1 day confirmation close, and that's it.
Yeah,
Like
not even an
we didn't
attempt.
even sniff secondary confirmation. We just got the close, and I was aggressive on entry, so like I got in, but like nothing. Stopped out 3 days later, and never even no bid on top of that. Like this pattern was fought for over a month. For over a month, traders who track that and then get snuffed out in 2 3 days, they're not coming back in the
They're
short term.
not
You're gonna
coming
have to
back soon.
redevelop.
Yeah, no, and so there's some vulnerability in the crypto world. There
Well,
is. I mean,
is what does it say that crypto, specifically Bitcoin and Ethereum, could not recover on the alleviation event last week?
yeah, and that is where I got crabby. That
Yeah.
that's what got me to write the article. That's what has me crabby on it on a Monday
I mean, you
afternoon.
had a downright pump in the market today, and Bitcoin gap down.
Yeah,
Can't even get above the close from Friday. Like, I think it's a not a good look. It's not a good look
yeah.
technically.
All I know is Bitcoin holders better hope the market doesn't turn risk off anytime soon.
Well,
Because
I
if this
think
was,
that's the only thing they have right now is hope.
and so just crabby development. It's going to have to earn this next one. It's going to have to
Yeah,
earn this next
I
one.
agree. I agree, especially with what gold and silver are doing these days. Like, I have
And I'm not
no
saying for
desire
all
to fight
generations.
crypto, and we're getting what we're getting in gold and silver these days. Like,
But I think the debate of what is the store of value, what is the inflation hedge, what is
that
the
was never a
anti-fiat,
debate. That was
it was.
only a debate. Never mind. I'm not even going to go into the detail. I was going to say something rude there, and I'm not going to do it.
Don't do
But
it.
I'm not going to do it. I'm not going to do it. But it was never a real debate, is my point. It was the crypto nerds wanted Bitcoin to be an inflationary hedge like gold. It's not. It's a insurance policy against the death of fiat. And can't that be good enough since we're seeing the death of fiat?
Yeah, it's
like,
just
like that's a pretty compelling argument in and of itself. You don't need to be everything that gold is to be a wonderful, wonderful asset. And so, like the anti fiat argument is the thing that got me involved in Bitcoin early on. It's the thing that I really liked about Bitcoin early on. The massive adoption argument was fantastic as well, but I have never, ever, ever logically understood the attempt by the crypto community to make Bitcoin a safe haven currency. Like I've never understood the rationale or the logic for that. Anti fiat, 100% with you on board. I'd be singing in the Bitcoin choir, but I've just never understood the inflationary hedge here because I don't see it as such.
yeah, it's well, there's a lot of questions going on in church these days. A lot of blasphemy amongst a lot of people.
The faith is getting questioned. Is
The
that is
faith is getting
is that
questioned.
what I'm hearing?
I
All
think
right.
that's I think
I just got one more question before we go into our next segment here, Chucky. What is the most important data this week for you?
the most important thing is Microsoft Meta earnings for me, right? The Fed meeting, not much of anything for me. Don't care really about Apple. Apple is an Apple story, but I am very, very curious. And Tesla is a Tesla story, right? I mean, all of those things are going to be interesting in and their own right.
Yeah.
But to be honest, like I'm more interested in the service nows than I am the Apples. And I'm interested in the companies that have been sold
Listen,
off.
ServiceNow is a big time AI name. So yeah, they're an
I
important
am
stock.
very interested in the software and tech-oriented companies
Mhm.
that have sold off over the last quarter, how they respond post earnings. That for me is the most
I got
interesting
a question
because
for you. What stock has been a bigger catalyst in the market, Apple or ServiceNow?
ServiceNow,
It's not even close.
yeah,
True.
ServiceNow. Apple's just an Apple story,
Apple's
right?
an Apple story. Like
And it's
I'm not trying to say anything negative about Apple. Apple's just an Apple
I
story.
mean, you can
Like
like derive some information on the health of the consumer, or at least the higher end, middle class consumer from
yeah,
Apple
on the
sales,
consumer, absolutely. iPhone sales and whatnot,
but for the most
absolutely.
part, Apple's an Apple story. ServiceNow, though, I think is very interesting, and that
It's
reports
an
on
early AI catalyst in earnings, so that's why it gets a little bit of love. But
and it reports on the same night as Microsoft and Meta and Tesla. So, like I made the joke in the lounge today. I think a lot of traders are excited for the Fed to get over just so we can get the earnings on Wednesday afternoon. But
honestly, I'm that guy. Like I could care less about the Fed this week. We're
I just don't
30
think
minutes
anybody
into the
cares about the Fed
podcast, and
this
I don't
week.
care about the Fed this week because I just think they're kind of a nothing burger. I think the real conversation is earnings, and I think this is an extremely important week going into this week with those 100 different S&P 500 companies. But you also have four of the biggest companies in the world reporting this week: Tesla, Microsoft, Apple, Meta. I think Meta, for me, Meta and Tesla are I'm a little bit more keen on those two than the Microsoft and the Apple one, but I think they're all important. But I also think it's a make or break week in the macro earnings environment as well. Mark, for how many quarters in a row have I been saying the positive earnings growth story? By five
Several.
quarters,
Yeah,
six, something
several.
along those lines. That's getting threatened a little bit right now.
That's an interesting, like, because that's like when you talk about foundations, I think the earnings foundation is number one for the bull market right now,
Oh, I
right?
don't even care about anything else. Like everything
Like,
else is interesting conversation.
because when things happen, what do people like me, who's very open-minded to be a bear at any
Mark,
given point?
how
I say, well,
Are
you
we
can't
talking
with
about
earnings.
Venezuela right now?
No,
Are we talking about
no,
Greenland right now? Are
no.
we talking about European tariffs right now in the
No.
market? What is the one commonality that ties every conversation on the macro side of the equation over the last 6 quarters? It's earnings. All these other little micro conversations that happen on the geopolitical side and the political side, they're annoying and we see them impact pricing, but kind of like a volatility pocket that we're going to talk about here in a second, they come and they go fairly quickly. They come and they go. The commonality that has been the glue of the bullish narrative has been earnings growth, strong earnings growth. And yet, going into the third week in earnings, so we've had the kickstart, then we had week one, then we had week two. Mark, we were at 8.3% blended growth on December 31st. We're at 8.2% blended growth today after 3 weeks of earnings. Now, in that 3 weeks of earnings, we haven't had the big dogs report. We haven't had a lot of the, like, we're only rocking about 10 to 13% of the S&P 500 reporting right now. We see 21% of the S&P report this week, including a lot of the blended growth that comes in. And so I made my comment not because I think we're not going to get double digits. I think this is the week we do start getting above 9 and we start getting into that 10%. But if that does not occur, like, I don't think you can call it a guarantee since we have not seen blended growth go up in the first 2.5 weeks. We didn't see it go up after the beats in week one with the banks. We didn't see it go up despite awesome beats coming out of Taiwan Semiconductor the week after. We didn't see it go up. We didn't see it go up last week, given the fact that Netflix had a 1 cent beat. That's not going to help anybody. And so, like, we just haven't seen outside of Taiwan Semiconductor a stock that had the ability to impact the blended growth on the macro side. We just haven't seen it yet. And it's just kind of been hovering there between 8.2 and 8 over the last 3 weeks. Like, you have to take a sizable step up in the right direction, or you're going to start threatening that growth narrative. Because as long as, like, this would be the sixth consecutive quarter that we were getting somewhere around that double digit growth. We're currently at 8.2. I still think we get double digit growth personally. But if you were to ask me 2 weeks ago,
It
would
would have
we
been locked in.
it would be locked in. I wouldn't even have this conversation. But 2 weeks later, I'm like, at some point, blended growth's got to giddy up and go. We're just staring down the barrel here. So I think it's an earnings by a wide margin over the geopolitical
Yeah.
side, over the political side, over the Fed. I think it's earnings one, earnings two, earnings three, earnings four, and then everything else, in my opinion.
Yeah, no, it's been a while. I mean, and that's one of the reasons it's so important is the foundational aspect. And if for some reason we're not staring at good numbers, well, I think Bobby
Listen,
Bovini from Goldman
Tesla's
Sachs
not going to
said,
help blended growth. It's not going to happen. And so I'm looking at you, Lam Research. I'm looking at you, Meta, Microsoft. I'm looking at you, Apple. Like, those, specifically those three, the Microsoft, Meta, and Apple. They got to come in with beats, and those beats got to be double digit. If I had to say right now, I would say Meta and Microsoft have double digit beats, and I would say Apple comes in around the 5, 6 percentile. But, like, it is that week that we need to see a sizable step up on that, or you're going to start to see more people start to question the earnings landscape, and not just me have a talking about it in front of it. Like, I'm not questioning it yet, but the data should be better than this right now going into Mag 7 week.
yeah, well, then obviously, if you want the up-to-date earnings. In fact, you want a sneak preview of that, watch Trade Masters this week. Matt, I have a feeling Matt will have Wednesday after the bell.
I'll give an early sneak peek on all those
You know,
Wednesday night reports. There's no doubt about that in Trade Masters later this week. Always Wednesday, 6 p.m. Eastern Standard Time. It is a live setting, so come join us on the Tackle Trading YouTube channel.
let's talk volatility pockets, man.
Yeah.
We get these events, we get these gap downs, we get these volatilities, events. Uh, they have certain characteristics in this market, and I thought you did such a fantastic job in the newsletter writing about them that I thought it was well worth a conversation. In fact, when I read the newsletter, I'm like, we're talking about this in the podcast because I think it was just such a good teaching, understanding, like, kind of like market behavior, on top of technicals. And so, walk us through with what a volatility pocket is,
Mhm.
right? And then, some of the characteristics we've seen over the last several months of these volatility pockets that have definitely shown some personality traits that are similar to one another.
Well, let's first, define what a volatility pocket is. A volatility pocket is the combination of an event that the market is not prepared for necessarily. Like, I wouldn't call whatever the market does following the Fed this week, Mark. Let's say it sells down 3%, similar to what we saw with the volatility event from last week. I wouldn't call that a volatility pocket, personally. It's a known event that gets priced into the market. Those are things that, any day that ends in Y type scenarios. A volatility pocket is similar to a black swan event. A black swan event is when unexpected news that nobody in the market can really prepare for occurs, immediately gets priced in, and sparks more. For example, when Silicon Valley went belly up a few years ago, and that headline hit the wire that there was a run on banks. Well, you had a volatility event, obviously, but that was a black swan event. You had an event occur that was not expected, that was on nobody's radar, that immediately gets priced in. Okay. Those are big events, though. Black swan events are big events, big catalyst. Like 9/11 was the black swan event during the dot-com era. The housing crisis when Lehman Brothers went belly up was a black swan event. When Fannie Mae and Freddie Mac and Countrywide and all those institutional firms went belly up, bankrupt, gone in '08. Those are black swan events. Those aren't volatility pockets. Those are black swan events. So the difference between a black swan event and a volatility event is the magnitude and the duration. Okay. Volatility pockets are when news hits the market that, once again, kind of like a black swan event, unexpected, not ready for it, catches the market off guard, and you simultaneously see a couple things. One, volatility spikes based on the VIX, and two, that volatility spike also leads to a violation of trend, pattern, and support and resistance
Okay.
simultaneously. That's a volatility pocket. And when you look at the last few months, we've had four volatility events. One of them I wouldn't even consider a volatility pocket. It's a similar concept. So once it broke trend, I just used it as an example in behavioral analysis. But there's really kind of three volatility pockets over the last 4 months. The other one was more of a concern. So if you're watching on YouTube right now, the first example was based on Trump tariffs and basically created a volatility event. The second one was also Trump tariff threats create a volatility event. The third one was actually concern on AI valuation coming out of earnings season last quarter. And so more of a volatility, we certainly saw increasing volatility, but I wouldn't exactly call it a volatility pocket. And then this one here is obviously one as well. So when you see the gap and it violates the pattern, the support and the trend simultaneously, that's a volatility pocket. And when you're looking at volatility pockets, the causation for the pocket is not nearly as important to me as everything else in that conversation. And that's all based on, quite frankly, you mentioned technical analysis, and then you mentioned it sounds like behavioral analysis. You know me, bro. Like, I don't see technicals without behaviorals.
Yeah.
They go in connection with one another. And that goes all the way back to Wyckoff when he was laying out the Wyckoff three rules of supply and demand drive price, cause and effect. And then the third rule was effort versus result. Well, when you look at how Wyckoff really kind of painted the backdrop and the picture of technical analysis in general, he put, without even knowing it, well, he probably knew it, but without laying out the concrete case studies and analysis, used a tremendous amount of behavioral analysis, quite frankly. And when you look at behavioral analysis, behavioral analysis, much like a chart, is the study of time and price over time. Well, behavioral analysis looks at that same lens, time and price, but it looks at the average time and the average price and the pattern development within a specific pattern in the market. So, for example, if you wanted to go back and back test high base patterns, you would go back and you look at, okay, in a slight extension environment, how many times did we see 3, 4, 5 days of consolidation lead to a breakout? And how many times did that breakout lead to a leg higher? Well, when you're looking at a volatility event, you look at, okay, how many times in the previous history have we saw a violation of trend pattern, support resistance, all simultaneously on an event that was not known to the marketplace? Well, we got 3 of them in the last 3, 4 months, and they all take on a certain degree of consistency from a behavioral perspective. And that's what I talked about in the newsletter. So when you're talking about those violations, my question, like you asked me last week, Matt, are we outside the volatility? And I started laughing. Of course we're not. You asked me earlier today, I can't, or was it yesterday in the futures open? I can't remember. But to me, it's all about the price expectancy with inside pattern and how much time it takes inside pattern. And this concept goes to a concept called potential average yield, which is Wyckoff based. I teach it at Tackle Trading quite a bit. But when you're looking at that, it's really looking at the pattern and then how much time and what pattern does the price take before we remove ourselves from the volatility. And so I talked about that in the Futures Open yesterday. I wrote about it in great detail in the Tackle newsletter this previous week. And at the end of the day, when you go look at pattern number 1 and you go look at pattern number 2 and you look at pattern number 3 and you try to assess, distance and pattern in pattern number 4, it was my assumption that we were going to be inside pattern by about 4 trading sessions on average. And when you remove yourself from the event, when you look at it historically, is after the secondary pattern develops and we get a confirmation close back up above all those moving averages. And so when you come into the market today and you're saying, oh, well, Chucky, ask me that question now. Are we outside the volatility event?
Matthew Todd Justice, are we outside the volatility pocket?
We are. It took us 4 days to get outside the volatility event, and it developed pretty good right at that 9 EMA and 20 SMA. And when you look at the volatility events of the previous situations, it took on average right around 4 or 5 trading
And
sessions.
this is what I
down
find so
7,
fascinating.
9,
I mean,
20 SMA.
This got me to, when I was reading the newsletter, this got me to sit back and be like, Matt, just no. I mean, looking at the amount of time it took to escape each of them, right? The similarities.
The average is 4, and this one's dead at 4. Like
this is letting you know the behavior in these situations.
It doesn't mean that the market's just going to scream forward now. No, it just means that you're now removed from the volatility event, and now you just have a technical read on the marketplace. And so that volatility event is over. We still got earnings in the Fed coming up this week, but yeah, I would say we're outside that volatility event, unless the president wants to double tap against European tariffs,
which I don't think he does.
I don't think he's in the right frame of mind for that right now.
Yeah, no, I mean, it's such a great lesson, man, and learning how to navigate, because when whether it's silver and you get too far extended from the 9, or when you get into a volatility pocket, knowing how to handle certain situations when you encounter them, right, just makes traders, right? Yeah. It go from a participant in the market to a trader in the market, right? Because in my world, you're not a trader until you can successfully do it. You got to earn those stripes.
Yeah, I agree with that. I 100% agree with that. But once you understand that there's 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 a behavioral analysis behind the technicals. And once you master technical analysis, I truly think what you're actually mastering is human nature.
Yeah,
That's
no,
embedded in price.
and I think that's what this lesson, analyzing the behavioral analysis of it all. And it's not a coincidence that the average has
No.
been 4 and then it takes this time. It just is that pattern. And if for whatever reason 2 months from now we have a tariff-induced event that is alleviated, well,
Well, there's
guess what?
patterns there too, Chucky. It happens about once every 30 days at this point. Put on your calendars February about 3 days after Valentine's Day, we'll have another volatility event.
All right, you ready to play a little game with me?
I am always ready to play a little
All
game.
right. So this Seattle and New England are in the Super Bowl. Some people
Mhm.
love that. Some people don't not. And some people absolutely hate it, depending on where in the spectrum you fall.
Well,
But
I just want to say good on the Hawks. Our girl Sylvia at Tackle Trading, big time Seattle fan. Very happy for the Hawks. And you know who else I'm very happy for before we get into this game? Sam Darnold.
that's
Like, I am becoming a big time Sam Darnold fan. Like, he got axed at the Jets. That's how bad the Jets are. He got axed at the Jets. He goes to Minnesota and does nothing but just straight up ball in
has
Minnesota.
a
Just
great year in
straight up
Minnesota.
ball in Minnesota. And Minnesota's like, no, we want JJ McCarthy,
You know
the
what?
unproven
Minnesota
rookie.
says, no, it's not you,
Like,
Sam Darnold. It's our system.
they're
And
acting like Sam Darnold's 45 years old and on his last go at this. He goes to Seattle when nobody else wants him besides Seattle, and he takes him to the Super Bowl in the first year. Like, I just, maybe it's because I would love to see a little egg on the Jets face too, but like, I just find Sam Darnold's story to be very
it's a
amazing.
fantastic story. Are you
I,
kidding?
I think it's awesome. I think it's awesome.
You know,
And the Pats, it's too early for me and the Pats back in the Super Bowl, but I,
all
I'm
right.
I'm 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 happy for my buddy Keith King.
I got some number-based trivia for you, and I'm going to tell you how close you have to get them to get a point. Got 9
Now,
questions
is the
real quick.
trivia football trivia or
It
is it
is
trivia?
it is either things to do with Seattle or Boston or the Seahawks or the Patriots.
Okay, so it's more about the culture, the city, okay.
But they're all that. So,
So and I have to get within a certain parameter for me to be right on this.
yes.
All
All
right,
right. So,
you
question
have
number
probably
1.
established this game that I cannot win, but let's go. Let's
All
try.
right. You have to be within 40 yards of the combined passing yards of Sam Darnold and Drake May yesterday.
Oh man.
So Sam Darnold had a big day. Drake May did not,
Um,
even though he won.
I think Sam Darnold had like 350. I stopped checking in the fourth quarter. At one point, he had 305, 3 touchdowns and a pick. I do not know. That was early fourth quarter, though. Um, I'm gonna say 350 for Sam, and I'm gonna say 50 for Drake. I'm gonna go 400.
You got within the 40. It was 432. Drake May had Sam Darnold had 346, and Drake May
Oh, I was
had
within 4 of
86.
Sam. There you go.
At 86.
Yeah, I don't know if
So,
you saw that blizzard in Denver, but that was intense. Like,
all right. Also, a 40. You have to be within 40 years of the year that Boston was founded. And I probably should give giving you too much leeway here. In fact, I'm going to make an audible. You got to be within 25 years of
of
when
when
Boston was
Boston was founded as a city.
as a city.
It was before the state of Massachusetts, I can tell you that.
Yes, correct.
It's in the 16th century. 17th century, 1600s. Am I
Correct.
right on the
Correct.
century? And I have to be within how much?
25.
Lock me in at 1645.
1630. That is 2 points for you. Very well done, sir. You have to be within 1 year of the year that the Seattle Seahawks were founded as a football team.
Where did they move from?
They,
Or did
I
they
do not
move?
believe they moved from anywhere. I think they were an expansion team when this occurred.
Yeah, when was that though? That's what I'm
Yeah,
trying
that's
to
the
get.
question.
It was before. I remember Steve Largent back in the early 80s and 70s, correct?
Correct.
Oh, and I have to get within how many years?
1 year.
1 year? That's not fair.
You should know this as a football geek.
The Hawks, I should know the Hawks.
When did Tampa Bay and the
I'm gonna
Seahawks come
say
in as expansion
early.
teams?
I'm gonna say early 70s. Largent was late 70s, early 80s. So I'm gonna say early 70s. I don't think it was before the perfect season by the Miami Dolphins. I just wanted to lay that out because the only perfect season in NFL history is the Miami Dolphins. I don't know. I'm gonna lock it in mid 70s at 75.
76. You get the point. Well done, sir.
Really?
Tampa Bay and Seattle came in at the same time. You have to get within one.
By the way, Tampa's creamsicle jerseys were amazing.
They were. They were
They're
some of the
so good.
greatest jerseys ever.
So good.
You have to get within one of the number of seasons Tom Brady started for the New England Patriots.
For the Pats only.
Yes, for the Pats only.
If I remember right, he came in 03. Was it 03?
I'm not telling you. Hey, you've gotten all these points. I'm not giving you any hints.
I want to say it was 03. I'm going to say 19.
It is 19. I should have gave you the exact number, but you would have got it. 19.
Yeah, I thought it was 19. He played his last few with the Tampa Bay, but are you kidding me? I'm a Miami Dolphin fan. I had to go through that for 2 decades.
All right, you're batting 4 for 4 so far, sir.
Okay.
You have to give me the exact number of Malcolm Butler who intercepted the pass that won the Patriots the Super Bowl the last time they played
Against
Seattle.
the Hawks?
Yeah.
At the 1/2 yard marker when he
When
should
they
have ran it
did
with
not give it to
Marshawn?
Marshawn Lynch.
Like, how
and
do you
they
not
passed,
give that to Marshawn on 2nd and 1? That's criminal, Pete Carroll.
like you can't
Criminal.
like, nobody will ever forgive you for it.
Marshawn was beast mode. He was
So
ready.
Malcolm Butler made the interception. What was his number?
By the way, that he stepped in front of that pick. It was beautiful, like beautiful. What was the question though?
What was Malcolm Butler's number?
Wasn't he 36?
Is that your guess, sir?
No. You're the look you gave me. No. I'm gonna go 24.
21.
Mm.
21. So
Butler was
Malcolm,
good corner too. He was a
all
good
right.
corner.
Within 5 years, what was the year the Boston Patriots,
Boston Patriots?
who would eventually become the New England Patriots, within 5 years, what year were they founded?
Boston Patriots? I didn't. They were the Boston Patriots.
They were
I
the
didn't know
I
this.
think a lot of people listening to this podcast are saying the same thing. They were the Boston Patriots?
I've always had them as the New England Pats. Like,
They were the Boston
so it
Patriots.
has to be before my lifetime.
It is.
I am an NFL connoisseur up until like 19 like before 1970 I'm not as good. But 1970 on I'm okay. So it's got to be 50s or 60s. I don't think it goes back to the 40s. That's more like Hollis and the Bears and whatnot. 5 years? I, I'm just going to split the mid at 1960.
How did you get it right on the nose? You
Is it
literally got it
1960?
right on the nose. It is 1960. That is impressive.
I didn't know. I didn't think it was 1970. I didn't think it was before 1950. So I just split the mid between 1950 and 1970.
Well, 1960. You're 5-1.
I figured I would get within the 5 point range on that one. I liked my odds.
All right, you have to get the exact number of Super Bowl appearances by the Pats.
10.
11.
Maybe which one am I missing? Brady had 9, right? Or are you talking about this one too? Does this one count?
What?
Does this one count in the 11?
I
Because I
believe
was not
no.
taking into account this one.
They hold the record for 11. New England Patriots, and I believe this is number 12.
Wow,
They have
that's
a six
impressive.
and they have a 6-5 record. They've won 6 Super Bowls, 6-5 record in the Super Bowl, but more appearances than any other team. All right, you're 5-2. Gonna have a winning record no matter what.
I'll take
With
it.
it within 5 years, I got two more. Within 5 years, when was the first Starbucks opened in Seattle?
I don't know. Oh,
Within 5 years.
oh my goodness. I have no clue. Can I ask a friend? Can I call a friend? Do I get a hint? I really don't have any clue.
You gotta guess a year.
1982.
1971. 1971. And then final question: how tall is the Space Needle? How many feet? Within 50 feet.
250 feet.
It is 605
It's that
feet
big?
tall.
Whew.
605 feet.
600.
Enormous.
I should have thought about that one a little bit more.
Listen, a respectable 5-4 record. That's a winning record. So,
Same
it's something.
percentage as the Pats winning the Super Bowl. I'll take it.
There you go. There you go. I got a couple questions from students. You want to do them
Yeah.
before we wrap up?
Yeah, let's rapid fire this.
All right. I got stopped out last week on the volatility on a few trades. How do you mentally get back on the horse?
Understand volatility pockets, and when they clear the volatility pocket, rinse and repeat your technical systems.
Yeah, and you just have to be willing to take a loss and get back on, right? We're all going to take losses, right?
Listen, when you simultaneously break trend, pattern, and support simultaneously, you're not alone in getting stopped out. I can tell you that right now. It becomes, and I talk about this at Tackle all the time in our pro membership. So you should definitely come out and be a part of our community. We have these conversations every single day, navigating these events. And the simple reality is, when you first get stopped out, like, nobody's in the thirst to go out there and pump a bunch of swing trades. And so it becomes more of a day trading environment than a swing trading environment. And then as we remove ourselves from the volatility event and intraday analysis gets a little bit tighter and gets a little bit more consistent, we start to see charts start to open up a little bit. You can start, expecting a longer duration than just, say, a longer duration day trade. So I would still say, like, it's more of a day trading environment than a swing trading environment. And that's how I compare the two. I don't compare, oh, this is a great day trading or a great position trading. I think most environments are a pretty good position. So it's really a debate on the swing versus the day. And I still maintain that it's probably a little bit better of a day trading environment, especially with silver and gold in slight extensions here. But to me, it's understanding that, again, after a volatility event, it's not about you, it's about the market. Fixate on what the behavioral suggests for that pattern. That's the entire reason why I wrote the newsletter this weekend. It was for questions just like that, to start understanding that it's not just you that got stopped out last Tuesday. Anybody that was bullish coming into Tuesday on those shorter duration trades, we got stopped out on Tuesday. That was a nasty volatility event. To see it recover frustrates you. That's why you, as a swing trader, it frustrates you. That's why you can still take advantage of those price movements and the recovery based on intraday analysis. And when you look at the intraday analysis last week, yeah, the volatility event was shocking, but it slowed its momentum, gave us a nice little bottom, and then it was 1, 2, 3 off to the races back to the top side. And now the market looks pretty back to being fairly healthy. I'd say the only problem, like, if we weren't in earnings season, I would say the market's right back into a swing trading conversation. But we are in the heart of earnings season, as those swing traders are going to take a back seat anyways.
I thought this question was really interesting when it was sent it in, and this was part of a larger conversation I was having. But he asked me to ask, what would have to change for your bullish precious metal thesis to break? What would have to change? Because you've had a bullish precious metal thesis forever.
I don't think the scenarios exist.
Because I saw your brain churning to trying to think hypothetically, if hypothetically X, hypothetical Y.
Is Rand Paul going to become president?
No, Rand Paul is not going to become president.
Is Thomas Massey going to become president?
No, Thomas Massey is not going to become president.
Then nothing's going to get me off my bullish projections on gold and
So it
silver.
would take a political leader that was.
It would take a political reset, is what it would take.
Yeah. Okay.
And because we're so far down the debt rabbit hole that even in the environment where we have a 4.5% GDP, we're bringing in billions in tariff revenue, our debt is exploding higher this year than it did last year. Like, so I just it would have to be a political reset.
Final question before we wrap up the pod. What asset class surprises you the most in 2026?
By the way, political resets have a tendency to happen with the death currency.
Which you're going to want to own gold.
Yeah, so nothing as of right now. I would say. What was the third question?
What asset class surprises you the most in 2026?
Silver.
I mean, it is.
Yeah, it's silver. We're only what 3 weeks into this. Mark, silver's up 33%. It's up 10% a week. Like I wrote on Twitter earlier today, man, congrats on silver being above 100, but I never expected this, and I was very bullish. I wasn't just talking about this year; I was talking about this pumped in the last 9 months. But I'd have to say it's silver. Like silver's outpacing gold. Silver, like the CME has tried to dagger silver multiple times to the point where they basically had to just throw up the white flag and give in on the rolling margin increases. Um, most chatter I'm hearing out there is just like me starting to think about 150 and not 100. I do have it as volatile, and it's very sensitive and very tough, to trade on a day in day out basis based on that daily chart. That's why I love the position trade, and I also think day trading strategies are really, really, really key here. But I would have to say it's silver. Like I'm not surprised Bitcoin's doing the same thing it has. I'm not surprised on Ethereum. I'm not surprised on the market. I'm maybe a little bit surprised on the weakness of software too. That when the concern on CapEx spend was happening, yeah, it makes sense to see Meta and Microsoft and Apple get punished, but software components got punished aggressively, and so maybe a little bit with software, but I would have to say it's silver.
Oh, fantastic. Send us out, brother.
Yeah, if you love the Trading Justice podcast, helps you navigate the financial world on a week in, week out basis, go ahead and give us a nice little like and share. Tell a friend about it and help us spread the good word of tackle trading and trading justice to other listeners out there as well. Also, leave a comment if you don't mind. If you have a question for anything we covered, hit us up in the YouTube channel. We will be answering those questions, comments as well. And if you're ready to become part of that Tackle Trading Pro membership and navigate the financial world not on a week in, week out, but a day in, day out basis, come over to Tackle Trading, sign up for a free trial, get that 15-day free trial, get access to the newsletter, the Traders Report, the Traders Lounges, the coaches shows, the mastermind groups. I promise you, we put out more than anybody else does, and it's also better than anybody else does. So come check us over there at Tackle Trading. You can hit the link in the description below. With that said, I hope everybody has a wonderful, wonderful rest of your week. And if you need anything from us at Tackle Trading, hit us up in team at tackletrading.com. Hit us up in the comments section. Hit us up in Discord. And with that said, we'll see you next week.
Have a great week, everyone.